Hey, what's up, crypto fam? Welcome back to Zacchy Crypto Update, your go-to channel for the sharpest insights and most actionable analysis in the world of digital assets. If you're looking to stay ahead of the curve, understand market dynamics, and potentially bag some serious gains, you're in the right place. Smash that like button, subscribe, and hit the notification bell so you don't miss any of our deep dives. Today, we're talking about Cardano, and trust me, you'll want to hear this. All right, let's dive straight into the charts for Cardano. For weeks, many have been scratching their heads about ADA's performance, but if you've been following the smart money, you'd know something significant has been brewing beneath the surface. Since around February 25th, ADA has done something really powerful. It's effectively flipped its previous downtrend. Instead of printing lower lows, we've seen it establish what I like to call a rising purple base. This isn't just a fancy term. It signifies a consistent pattern of higher lows being stacked, specifically above the $0.745 mark. Think of it like a coiled spring, building pressure. This pressure is also being squeezed inside a very specific chart pattern, an ascending triangle. For those new to technical analysis, an ascending triangle is a bullish formation. It's characterized by that flat resistance level, which for ADA is at $0.863, and those rising higher lows. What does this tell us? Buyers are stepping in at increasingly higher prices, showing conviction, while sellers are struggling to push the price below that key support. And here's where it gets even more interesting. The latest rebound off that $0.745 support level printed a very clear bullish hammer candlestick. For me, seeing a bullish hammer after a retest of support is a powerful signal. It tells us that despite some selling pressure, buyers aggressively stepped in, pushed the price back up, and closed near the high of the candle. This indicates a strong rejection of lower prices. But wait, there's more. We're also seeing fading sell volume. What does low selling volume on a retrace tell you? It suggests that the selling pressure is exhausted, that fewer people are willing to sell at these lower prices. This, combined with the hammer, is a classic sign of accumulation. Smart money is quietly building their positions, and it signals fresh bullish momentum is just around the corner. My personal opinion? This is exactly the kind of setup that separates short-term noise from genuine market structure shifts. We're not just seeing random bounces, we're seeing strategic positioning. So we've identified the setup, but what's the trigger? What's the signal that tells us this coiled spring is about to unleash? For me, and many other analysts who have been watching this closely, the key trigger is a 4-hour close above 78 cents. Why 78 cents? This level represents a short-term resistance point, and breaking above it with conviction, especially on the 4-hour time frame, would confirm that the bullish momentum we've identified is truly taking hold. It shows that buyers have overcome that immediate selling pressure. A successful 4-hour close above 78 cents could unleash a significant push towards our primary targets. First stop, $0.863. Remember that ascending triangle I just talked about? $0.863 is the cap of that triangle. A break above this level would be a major technical breakout, signaling a move out of this consolidation pattern and into a new leg up. This isn't just my analysis. This is the buzz rippling through many premium crypto trading signals feeds right now. We're talking about a level that, once broken, could attract a lot of fresh buying interest from both retail and institutional traders who follow these patterns. But we're not stopping there. Beyond $0.863, the next logical target based on typical ascending triangle breakout projections and historical price action would be 90 cents. This is a psychological level, often acting as resistance or support, and hitting it would signify a very strong bullish continuation. Think about it. Moving from 78 cents to 90 cents is a substantial percentage gain, especially for an asset of Cardano's market cap. This move would likely shake out many of the late-stage shorts and bring in new long positions. My thinking here is that the market tends to move in waves. We've had a period of accumulation and consolidation. Now, with these technical signals lining up, the probability of a decisive upward move is significantly increasing. It's about confluence of indicators, and right now, many are pointing in the same bullish direction for ADA. Now, as much as I love talking about potential upside, responsible trading and investing always involve managing risk. We never go into a trade or analysis without knowing our exit strategy and what invalidates our bullish thesis. For Cardano, the critical level to watch on the downside is $0.745. Remember, this is the floor of our rising purple base, the level where ADA has consistently printed higher lows. If we see a slip beneath $0.745, especially on a sustained 4-hour close or multiple daily closes, then this entire bullish ascending triangle pattern, the accumulation phase, everything we just discussed, cracks. This is not just a small dip, it's a structural breakdown. A break below $0.745 would open the room for a swift retest of 70 cents. The 70 cents level has historical significance as a support area, but if $0.745 doesn't hold, the momentum could easily carry it down to that next significant psychological and technical floor. What else should we keep an eye on? The Relative Strength Index, RSI. The RSI is a momentum oscillator, and it can give us early bearish hints. If we see the price struggling to break above 78 cents, and simultaneously the RSI starts to trend downwards, or diverges negatively with the price, meaning price is going up but RSI is going down, those are warning signs. It would indicate that the buying momentum is weakening, even if the price is holding steady in the short term. Always combine price action with momentum indicators for a more complete picture. My advice, never marry your bias. Be ready to react if the market tells you you're wrong. So, putting it all together, Cardano is at a very critical juncture. The technical setup is undeniably bullish, with the pattern of higher lows, the ascending triangle, and the bullish hammer signaling underlying strength and accumulation. The trigger for a significant move is clear, a 4-hour close above 78 cents. If that happens, we're looking at targets of $0.863 and potentially 90 cents. However, we must remain vigilant. A breach of $0.745 would invalidate this bullish thesis and could lead to a retest of 70 cents. Beyond the charts, let's not forget the fundamental developments within the Cardano ecosystem. While this analysis is heavily technical, the ongoing progress with scaling solutions like Hydra, the increasing number of dApps deploying on the network, and the growing community support all provide a strong fundamental backbone for ADA's long-term potential. Point 3. These aren't just empty promises. The development activity on Cardano is consistent and robust, which gives me confidence in its future. My overall thinking is that while Bitcoin often leads the charge, strong altcoins with clear technical setups like ADA are often the ones that offer substantial percentage gains once the market sentiment shifts positively. Keep this chart on your watch list, set your alerts, and be ready to act. That's it for today's Zacchy Crypto update. Thanks for tuning in, stay safe out there, do your own research, and I'll catch you in the next one. Peace out.